Good morning, traders. Welcome to the TMT Stock Market Strategy video for Friday, August 11th. All right, traders, selling was fast and fierce yesterday. One day pretty much wiped out a good month and a half worth of gains. You could see that here in the ES. And that's what I kept mentioning. Watch these big long days, these big down days, excuse me, and we'll see where we go. Now, one day does not make a trend change, and technically our uptrend is still intact. You can see that here from this uptrend line that goes back way into 2016. Where do we go from here? Well, is the uptrend still intact in the sense that we're still looking at 2500, 2550? At the moment, yes, we're going to need more evidence. We are coming into our time of seasonal weakness. We did mention we're looking for a market to top and to get an increase in volatility between August and October, and it's happened now. Whether it be the geopolitical risk, what's going on with North Korea and the United States, it could be anything that triggers a market to start taking profits. Now, it's not only just taking profits. Many of the pundits say, oh, we would just markets are just taking some profits. There was absolutely full-blown selling. There's not a question about it. Selling happened across the board in all of the asset classes, and we'll see if it resumes today. We're down now only about 4 handles, but we had a very nasty day yesterday. That is a precursor, I believe, of what's to come. All right, so let's get to the levels on the daily chart. Now, you guys, listen, I'm telling you, we had a monster day yesterday. The Pro Trader Premier videos did fantastic. The trading room did amazing with our signals. Come check it out if you're not in it. Get involved, because the big money is going to happen between August and October, and if not, going into the end of the year, it's going to be a phenomenal fourth quarter. And it's going to be, I believe, it's going to be a great trading summer, the rest of the summer anyway, for the last 4 weeks before we go into September. All right, so we have, this is the area where we're going to need to hold, which is going to be yesterday's low, 24.3475. Pay attention to that for those of you trading ES. And then, of course, resistance, big resistance comes way back here at 24.6350, which my belief of my technical view of what I've seen throughout the years, usually we get a little bit of a bounce and try to take back 38 or 50% of this candle, and then next week really going to need to prove itself that we're headed back up, or we're going to start selling off again. All right. Just saw some negative tweets to Donald Trump with North Korea that the troops are locked and loaded and ready to go. That's not a very good sign, because now they're both confronting each other and pushing the buttons. So we'll see what happens here, guys. This is not good. NASDAQ, NQ, we mentioned that this is going to be the better short. We had a big sell-off here back in late July. We had not recovered even 50% of that of this big engulfing candle, so we rolled back over. We lost the 21. We're below the 50, and now we're below the TMT proprietary price channel. So next target's going to be 56. Let's call 5,700 right here in the NQ. MACD, RSI on sell signals, not really not a good sign out there, guys. And after this one, after this area that gets taken out at 5,700, now you're looking down here at 5641. Remember, risk off happens extremely fast, so make sure you're prepared for it. Next is going to be crude oil. Interesting developments with crude oil. We talked about the commitment of trade reports, how the producers are shorting crude oil heavy at the last 3 to 4 weeks. As we get to the 50, I believe it's going to be a big roadblock for crude oil. OPEC and obviously OPEC members are talking their book up, trying to push crude back up to 50. That's when the shale guys kick in, and I just don't think you're going to see higher prices. And I have 2 bigger targets of my objective targets to look to get short. I personally don't think you're even going to get there. There's a huge glut, and even though we have draws that are coming in our DOE report, the API report, the reason why is because we're in driving season. Once that subsides, you're going to see heavy gluts of I believe, of inventory. And on top of that, we had OPEC came out with their report that they increased their supply, they increased production for July. Now, what does that tell you? That tells you that nobody's really adhering to these production cuts that were done back in November in Vienna. So the market sold off on that. So I think you're going to have a big problems here. I think you probably go into somewhere low 40 areas, and then we would reevaluate it. We'll see. Let's keep it one day at a time. It's one day. So one day does not make a trend change. We are making higher highs and higher lows, and that's still intact for now. Okay. Next is going to be GDX. Now, Gold exploded on the safe haven play, but GDX did not, right? Just challenged a small swing high here. If we take out this swing high, we'll probably run up to the next swing high here around 23.83. I'm staying away from gold personally. We had a nice big move in gold, and I think gold's going to need to kind of settle in a little bit and give us one big deep pullback where we can pivot from a higher low from this previous low and then look to trade sideways and then start to break out higher. That's when I would be looking to buy gold. Here is gold itself, and here's what I'm talking about. We're up about 20 days, and we sold off about 5, and then we gapped up 2 days in a row, 1290, 1304. So I'm looking for a pullback in gold. But if this tensions continue, you're not going to get a pullback. You'll continue to get gold to go higher until the tension subsides, just like volatility. You're going to have money managers, hedge fund managers, even retail. The retail crowd got caught now heavily long up at these levels here at 2450, 2400, 2475, buying all-time highs, and now they're all caught. So what happens is, usually rule of thumb is that when the market gets back up to 2450, 2475, you're going to get massive selling to get out, because now they're all nervous, and that's what happens. Remember guys, we've been talking about this passive investing is now at I think 10-year highs, that where the retail crowd are taking their money out of the professionals and doing it themselves, and then looking to pay the fee. So now what happens is the retail owns a big basket of ETFs, and when the market sells off, what happens? They do not cover. They don't know how to manage their position. That adds more fuel to the fire. So that's why I think it's going to be pretty nasty when it does really happen. Bonds actually ticked higher. As we recalled, 155 needs to get taken out. It did. Let's see if we get another outside day from this 155 area, and then Monday we take the highs out here. We'll look for a long on buying on pullbacks for the next pivot high, swing high at 157 in ZB. Okay, spiders now back to those ETF indexes. 240, 230 is going to be your next spot, and right now we held this uptrend line. So remember, the uptrend is still intact, but the uptrend with the market divergence, and now with the red flags and cracks in a wall, are much more identifiable, if you will, and you can see what I've been talking about. When there's nothing going on and you still see these divergence going throughout the indices, it's only a matter of time, and it doesn't have to be even the geopolitical risk. Could have been something else. It's always something to spark that move lower and or higher, for that matter. Transports, here's one of our market divergences we had. As you know, we were making all-time highs for 10, 12 days in the Dow, where the transports are selling off. And mentioned many times about the Dow Jones sell theory. I am not a Dow Jones theorist, however, but I like to pay attention to a lot of other things to collect my data and give me the objective technical view in the markets. 165.02, guys, right up in here. We got the 163.13, and then swing high pivot of 167.35 in the transports. If we lose the 200, we're going to get to the 158.94. Second market divergence we've been talking about. IWM hasn't done really anything. Sure enough, broke down, and now the 134.74 comes into play. The bigger picture target, the first area of support, the bigger picture is 130.94. But you could see how miserable this thing felt. We've been going down for days before the market actually started to sell off. So use caution here, guys. This is a crazy market, and remember, with markets at all-time highs and valuations through the roof, you have to be very, very careful, because at any given moment you can have a mass liquidation and everybody running to the exits, because we have a major crowded trade here. All right, Q's daily. Again, caught the low run of the TMT proprietary price channels, 141.10. That's going to need to hold for today. If not, we're going to flush back down to the 136.43 off the daily. 143.84 and 144.74 are your two areas of resistance on the Qs. Hope it helps, guys. Again, Friday, summer doldrums. Use caution. Markets will overreact, and moves will be exaggerated to the upside and or to the downside because of lack of liquidity. So pay attention to your trades. Make sure you have your stops in place. Very, very important, especially going into today. Next week really is going to be the spot. If we bounce today, it's going to be meaningless to me personally, because it usually will bounce today because we're kind of oversold at the moment. But remember, next week's going to be the bigger picture, and we'll see how the markets react to what's going on in the news. Now, remember, with all these high tensions, you could get continued selling today because it is Friday, and a lot of traders don't want to hold their longs going into the weekend. God forbid war breaks out. So just keep that in mind when you're trading for today. Have a great day. Enjoy the weekend. We'll see you on Monday.